Hello, everybody. Welcome to the latest edition of CNF Talks. It's a great pleasure to have with us today Will Pearce, who's a partner at Davis Polk. And Will is going to be speaking at our M&A Summit 2024, which is being held in London on the 21st of October. Will, welcome.
Thanks very much, Morris. Nice to be here.
Great to have you with us. Let's start by having a quick chat about the macroeconomy and whether it's now more favourable for M&A activity. Obviously there was a quarter point reduction in the UK interest rate. We got a new UK government preaching stability and so on. But set against that, perhaps we have the uncertainty about the upcoming US presidential election. How do you see the sort of general macroeconomic environment? Is it more favourable now after a pretty dire year last year for M&A?
Well, look, I guess we all look back to the highs and busyness of the second half of 2021, and I guess we all point to that in terms of what ideal activity would look like, where you've got the double whammy of both lots of volume of deals, but also the value of the deals. Everything, as you know, Morris, dropped off a little bit first half of 22, and then dropped off further second half of 22. I think from the low point of end of 22, things have gradually come back over the last 18 months. There are different studies that look at volumes of deals, that look at value of deals. I think the important thing is that we're still not back there with the volume yet. So volumes are still a fair bit lower than they were kind of come end of 2021. But the good thing is that the value of deals, which goes to confidence, is coming back. We've had a pretty rough time in terms of the impact of conflicts in Ukraine, Gaza. We've had lots of regulatory change, which people sometimes forget about. So the world has become a much more protectionist place in terms of control on foreign direct investment, which in turn feeds in, I guess, to the political change that we've seen around the world. You look at the elections that have taken place during the course of this year already, and then obviously the focus on the US, I'm sure, as we go into Q4, and then changes in terms of political attitude to China, which certainly has had an impact on Chinese investment in Europe and the UK. All of that put together, I think, has meant that the deal volume that we see is all organized around the US European axis. And candidly, I can't see that changing in the near to medium term. So hopefully that will survive. Hopefully that will survive the presidential elections in the US. I guess the other thing, just in terms of deal activity, we have seen a little bit more outbound M&A from Japan as they seek to remodel their economy and look for growth outside of Japan. So I'm sure that will continue. In the UK, maybe I'm sure that we're going to come on to talk about Labour government, etc. But in the UK, we have got a period of, shall we call it, relative calm. I'm sure it's all about to kick off again, but sort of post the Brexit political turmoil that we've had in the UK, I think everybody's sort of taken a little bit of a sigh and relax that we have, for the moment anyway, got a period of calm, which is good for deals. And anecdotally, I'd say going into the second half of 24, my sense is that the market is busier, that there are deals, M&A deals in the pipeline, both public and private.
Yeah. Well, that's good. I mean, thank you for that tour d'horizon, and I agree with all those factors. When you talk about the US Europe axis, is that sort of like a one-way flow? Is it mainly US acquirers looking at Europe, thinking that assets are rather cheaper than they are back home?
If you look at if you have the time or the energy to put together the sort of flow of capital charts, and you look at where the money's coming from and where the money's going to, I think invariably, if you and I were to sit and put one of those up on the screen, there would be a big arrow coming from the States to Europe. But I think there are certainly signs that, and when I talk about Europe here, I'm obviously including the UK. I think there are signs that there is the ability for large European companies to do deals in the States as well. And part of that, I'm sure, is driven by the attitude of the US regulators on the antitrust side, which means that
mm,
there needs to be a US company's got to have a little bit of flexibility as to where it looks for transactions.
yeah. Yeah, and turning to the role of private equity, obviously private equity is now a very large part of the M&A market. How do you see that playing out? Because clearly a lot of the larger players are stuffed to the gills with investee companies that they need to sell, or to get rid of either through an IPO or through a trade acquisition. So how do you see that working out then on the other side of it? Clearly, that they have a lot of money available, dry powder, to make other acquisitions. How do you see the role of private equity playing out over the next 6 months or so?
Well, it's the $1 million question, isn't it? And there's a sort of a little bit of a natural tension there between those two things. So private equity works on the basis of recycling capital and delivering returns to investors. And unless they deliver the returns to the investors won't invest the money in the next fund. So
Yeah,
it's a little bit of a virtuous circle. So look, there's lots of dry powder there that funds need to put to work to demonstrate returns to their investors so that they can move on to the next fund. But they're also,
mm,
as you say, sitting on a bunch of portfolio companies that they will need to trade or do something with in the next couple of years.
mm,
I think, look, you mentioned inflation. I think with inflation easing, with uh, debt being a little bit more readily available than it has been for a while, albeit in lots of cases from slightly less traditional sources, maybe the continued rise of the alternative lenders. I think you
yeah,
will see more activity. But to be honest, we're a fair way away from the sort of heady auction processes, sell side processes that we saw in the sort of run up to COVID and immediately following COVID. So
yeah,
if the volume comes back, you may see a little bit of rebalancing there in terms of deal terms, maybe an
mm,
acceptance that
okay,
it's a little bit more of a buyer's market. But
yeah,
things like the W&I insurance market that provides recourse on a transaction, which is what gives the private equity firm the clean break. The market is still open. The terms are really good, and
yeah,
W&I is now an accepted part of that. So that
mm,
that together with more availability of debt, if
mm,
people are patient and they run a proper process, they
yeah,
should be able to move assets on.
mm,
Um, so I think everybody, if you talk to people in the market in the UK, everybody's pretty confident that private equity activity will continue to march.
yeah. And I guess some of that is obviously take privates. And to what extent has the sort of capital market reforms assuaged some of the concerns that listed companies have about the costs versus the benefits of remaining listed on exchanges here? And to what extent is that there's still plenty of public to private transactions in the pipeline, do you think?
So, so again, a really good question. I mean, we've all debated the future of the UK capital markets for the last, I want to say, 24, probably going on 36 months.
Yeah.
Um, I think maybe let's take public to privates first, and then come back to the listing rule
Mm,
reforms. Uh, Over the last 10 years, we've probably roughly run. Don't quote me on this, but we've probably roughly run at about 50, call it 40, 50 takeovers a year of UK listed
mm,
companies. And I don't need to say we haven't run at 40 or 50 IPOs a year to replenish those listed
mm,
companies.
mm,
The net effect of take privates or takeovers has been to reduce UK listed companies by something like 25% over the last decade.
yeah.
Um, Personally, I don't see that changing over the next 10 years. And to be clear, that's
Mm,
not a comment on the good work of the FCA and the good work of the team of people across the city who've been working to make UK capital markets more effective. I
yeah.
think it's far more nuanced question, as you and I have discussed before. But I don't see that changing. I think private equity, if you go back to Kraft Cadbury and you look at the changes to the code, there was a period of time post Kraft Cadbury 13 years ago where private equity were a little bit cautious about doing take privates in the UK because they couldn't get all of the deal protections that they wanted in the takeover. I think with the movement in lawyers and bankers, with increased US to UK deal activity, increased take privates, I think private equity firms are much more sophisticated. They're very comfortable working with the takeover code. And I think the panel has done a good job at moving with the times. We had practice statement 31 back in the spring to sort of clarify the rules around private engagement and private sales process. That was aimed, I'm sure, in large part at private equity and those kind of conversations that management want to have with a potential bidder early in the process. So I don't see the takeover side of things changing. I think we'll still see bids and we'll still see take privates. The size of the deals will obviously be dependent on the availability of debt and the willingness of management to roll over. On the listing rule side, it's a super complicated question that you and I have spent days, if not weeks, debating over the years. I think the changes that the FCA have made to the listing rules are M&A friendly. So in very broad terms, to give the ability to a main market listed company to buy and sell a material business without the need for the disclosure and without the need for the shareholder vote will improve the competitiveness of UK public companies in the M&A markets, particularly in private trades. And who knows, maybe we'll see public companies choose to sell part of their business rather than agreeing to a takeover. So it could open a world of opportunities in the M&A market. But is that going to fix the number of UK listed companies? Not alone. I think that's a much more complex issue.
Yeah, very interesting. I think sadly our time is up, Will. For our viewers, we very much hope you'll be able to join us on the 21st of October at the conference in London. Further information available on our website, www.cityandfinancial.com. And we very much hope to see you there, and so we can continue these discussions with Will and the outstanding caliber of speakers we have joining him. So thank you very much, Will. We'll see you there at the conference.
Thank you.